Today we have the pleasure of launching an Inuka Enterprise Impact Evaluation Report. This is a 5-year capacity building program that we have been implementing at KBA, really to support our MSMEs in terms of formalization, in terms of access to finance, in terms of value addition, as well as also being able to increase their productivity and improve their operations across the country. It's true that we've been able to enhance MSMEs access to funding, and you've mentioned about the 5.8 billion shillings extended by banks to MSMEs as a result of this intervention. Some have accessed it in full, while others partial access. That is indicative of the nature of these businesses, as indicative of the nature that of risk-based pricing, because at the end of the day, risk-based pricing requires that borrowers are assessed based on their risk, and the loan amounts that they are granted is actually reflective of their risk at any given time. So it's not about excluding them completely, but finding a way of onboarding them along the journey. And of course, once they are onboarded, one thing that we appreciate in banking is about relationship banking. You may start small as an SME, but then over time, as you demonstrate your capabilities to repay, your character to repay, and your performance through the financial records that you keep, you can actually access more over time. In other words, your risk profile improves over time, and you can access higher limits. You can also access higher limits at lower prices with demonstrated good character in terms of repayment culture that you have. So that is the principle behind risk-based pricing. That one, for us, what we do is that we would want to onboard them, then build on them a relationship culture so that they have a partnership with the lender, so that at the end of the day, they're able to improve their profiles over time and access higher limits at much more favorable terms going into the future. So that is our main objective of engaging the MSMEs. So we do webinars on a monthly basis, and one of the webinars we did last year was really just on the credit scores generated by the bureaus. And the objective of that webinar was really to enable them to see what is the importance, what is the benefit of having a credit score at a particular level. So that they are able to actually be encouraged to improve on their credit score, because it has good implications on credit access at the end of the day. So we are quick to sensitize them on why they need to focus on improving their credit risk status and profiles. This is only one of those interventions, because when you look at access to finance, capacity building is just one aspect out of it. There's still a lot that can be done to support MSMEs access more funding, but so far with this coming on board, with this program coming on board, the 5.8 billion is what we can report. And again, the reason why we were doing the impact evaluation is for us to really check what are the areas of interventions that we need to scale up, so that we also grow this uptake of credit and extension of credit to MSMEs. So there is still room for improvement going into the future, and even the number of interventions can also be enhanced beyond capacity building. What else would need to be done is something that we are keen to grow these interventions, so that we do not only reach a few MSMEs, because so far we've trained over 70,000, but 10% of that have accessed finance. The 5.8 billion shillings is just a reflection of a small bit of the market, so there is room for growing this. For the women MSMEs, I think what we have done under the program over the past 5 years, we've been rolling out a program that is blanket. I think what we have now established is that we need to have dedicated programs for men and dedicated programs for women in the MSME space, because they are unique. They carry a unique role, and their operations are very unique also. So we need to be very, very deliberate in the design of products that suit women needs, in the way we conduct even our training, because we must be able to align our operations to what is convenient for women. Because at the end of the day, we need to go to where the women are and be able to engage them at their convenience. Being able to identify that segment of the population as critical and identify them as unique and actually reached out to them with specific products. So we can only encourage lenders that as we do lending, let's be very sensitive to the component of gender, because we must be able to differentiate where we sit, the capabilities, the uniquenesses, the features that we need to onboard on the products is very critical, because at the end of the day, if we use one blanket approach, we segregate and we can easily exclude segments of the population, and that includes the women.